Hello and welcome to episode 4 of Free Speech, the Natural United podcast, where we talk about issues that affect the environment and the beyond. And today we have a super interesting topic. It's something that I'm very passionate about, and that is green investing. What I mean by green investing is using the stock market as a vehicle to bring about sustainable change in our environment. And we're going to go through 6 different industries throughout the course of this video, each of which has the potential to improve the environment on our planet through the action of corporations rather than government. And so, the United States, we're in a very interesting place in the stock market of the United States. We just faced a massive sell-off as a result of coronavirus, and on top of that, the largest increase in one day that we've seen in over 10 years. And so, there are a lot of factors that go into this, but a big thing to keep in mind is that the best time to buy is obviously in a trough scenario where prices are as low as possible. And we may be approaching one of those in the next 3 to 5 years, where we go through a large recession and afterwards you are capable of getting ridiculously cheap prices on stocks. And so I figured it would be nice to give you guys different stock options that you have to invest in businesses that are sustainable. But beyond that, I do want to express that I am not giving financial advice in this video. I'm more so allowing people to understand 6 different areas of environmental sustainability that you're able to invest in and examples of companies that are in those. So don't take this as your financial advice. Don't replace your financial advisor for this information, but see it as an opportunity to learn a few sustainable businesses that are available to you to invest in. And so something to keep in mind is that the vast majority of the securities that are available to people investing in the stock market are not only economically unsustainable, but environmentally unsustainable. And what I mean by not economically sustainable is that their business model is incapable of lasting thousands of years. And the reason that I say this is that a lot of businesses are based off of materials that are running out. Fossil fuels are the easiest example of this, but you also have to think about rare earth materials when it comes to companies that create technological devices. So the first area that we're going to be talking about is water stocks. And there's a lot of different areas that you can go to, but water is something that is obviously crucial to life. And an interesting fact that gives you a perspective of just how important it is to our daily life is this. 5 European countries depend on 75% or more of their water coming from a river that flows through other countries first. And there's examples of this all over the world, but that's one that people commonly bring up, is how dependent Europe is on different countries maintaining water sources. And so it's a very important space, and investing in just like the collection and the distribution of clean water can help improve global access to clean water, and it's why it's such an important part of the economy. So the first example of a stock in this space is American Water Works Company. AWK is their ticker. It's a $24 billion company, but what's interesting about them is that their beta is 0.11. So an average beta is about 1. So 1 is the average beta, and it is an indicator of how safe an investment is or how risky it's believed to be. Now, it's not always perfect, but typically a lower beta, let's say at 0.5, means that it's going to be a relatively safe investment. So AWK is at 0.11, which is incredibly low, much lower than you'd usually find in the market, with a PE ratio of 38, which is slightly above average, meaning for every dollar they make, their stock is valued at a bit more than you would expect for the average stock on the market. And then on top of that, they pay a 1.5% dividend, which means for every $100 of stock that you own of them, they're basically paying you $1.50 every year. A second example is actually a fund. It's not a particular company, and that's Calvert Global Water Fund. CFWAX is that stock's ticker. It's got about a beta close to 1 of 0.97 and dividend of nearly 1 as well, 0.1, which is 0.84%. And then on top of that, it's got a 5-star Morningstar rating, which is very, very rare. You don't usually see that on investments. And so that's an indication that people who spend a lot of their time looking at investments are saying this is an area that you might want to look. The third example, this is my personal favorite, is Brookfield Renewable Partners. They do a lot of really interesting things, and they're actually a $10 billion company. Their beta is below 1 at 0.7, meaning it's believed to be a bit less risky than the average in the market. And on top of that, they pay a very, very high dividend of 4% a year. So again, that means if you have $100 of this stock, that you'll get paid $4 every year simply for owning it. And since 2018, the stock has more than doubled, and it's been a massive growth in the area of water stocks. And so then if we look at the second most popular area in terms of renewable businesses, we look at different wind stocks. There's two that come to mind, one of which is Next Era Energy Partners, or NEP is their ticker. It's a $4 billion business. It's got a beta of about 1, and then on top of that, it pays a dividend of 3.7%. It's a bit overvalued right now, but it's a very good long-term investment when it comes to the numbers. And beyond that, I think that wind is going to be a super interesting area to look at because the technology just keeps lasting longer and longer. It used to be that the panels would only last for 5 years, and now we're at the point where a turbine can last for 25 years. It is expensive to repair, but beyond that, the second example is Vestas Wind Systems, and that ticker is VWS.co. It's priced at $693. It is a $135 billion corporation. It has a PE ratio of 160, which is very alarmingly high. Average is about 20 to 25, so that means that a lot of people are investing in it compared to how much money they're making. But at the end of the day, that's because people believe in the technology and they want to see it proliferate. So water and wind are the two most popular, but there's also a lot of different areas that you can invest in the environment. And when we go over those, it's important to remember that they are still developing and that technology is very, very archaic when it comes to renewable resources still. The third area that we're going to look into is solar stocks, and this is one that I'm particularly interested in. I think that once our technology advances, that we'll have a lot more ability to harness the power of the sun. Something interesting to realize is that if we could harvest all of the energy that comes from the sun to Earth, we could power everything that goes on the surface of the planet in 90 seconds. And so there is a lot of energy coming from the sun, and that's important to remember. So I have two examples of interesting solar stocks that you guys should look into. The first is Enphase Energy with the stock ticker ENPH. It is a $6.5 billion company with a beta below 1. And what's interesting about it is that it was priced at $18 in November of 2018 and is now priced at $52. So it's seen a lot of growth. It does have a PE ratio about double of the average, so they're making about half as much money as you would expect for what the stock is priced at and how much money they're making. But beyond that, very interesting company to look into, and if you had invested in it 2 years ago, you'd be a lot wealthier. And then the second example, this is one that I have invested in myself, is Sunrun with the stock ticker RUN. It is a $2.3 billion company. It's got a 0.63 beta, which is surprisingly low, and a 95 PE ratio. So this is a very bizarre investment where it's kind of a business that a lot of people believe in, despite it not making as much money as you would expect for how it's priced and how many people own the stock. And that can be a good indication. A lot of times companies like Netflix are the same way, where their PE ratio is very high because a lot of people know about it and believe in it. And then this is an area that I think is super, super interesting. It's actually pollution control companies, and they create massive innovations that reduce greenhouse gases in power plants. They minimize auto emissions, do a bunch of really cool projects that make it so that our future will be more sustainable for children in the next generations. And so the first example of an ETF, so that is a collection of different companies that are in this space, is the Van Eck Vectors Environmental Services ETF. The ticker is EVX, and then Invesco Cleantech ETF, PZD. These are both funds, so a lot of different companies that are doing all sorts of things to reduce emissions and overall make society more sustainable. So investing in this really is kind of an opportunity to put your money in a place where we are creating economies that will be able to last for a very long time. And I think that's a formidable way to spend your investment money. And then our fifth area that we're going to look at, I only have one example for this. There are other companies that are doing this, but the big one, the one that's really worth talking about in green transportation, is Tesla. TSLA is the ticker. Today it's priced at $777. Obviously, it changes very quickly from time to time. Only a few weeks ago, it was around $900. When I was in college 4 or 5 years ago, I was able to get shares for under $200, and so it has grown very, very quickly. It was at $37 in 2013, which means that in 7 years, it has gone 21x. It is a $143 billion company with an earnings per share of -5, which is hilariously low considering how high it's priced. But here's what's interesting about Tesla, and I think that this kind of is a message that's important about all environmental companies that you could possibly invest in, and it's this. people believe in Tesla because they think that it will have the potential to reduce our fossil fuel emissions as a collective society. But what's interesting about it is that people are investing in it even though it's losing money. It's losing a lot of money. It doesn't have a PE ratio. We're incapable of giving it one because it is losing money. But at the end of the day, people believe in what they're doing, and as a result of that, they invest in it. It is very, very volatile, so be warned of that. But at the end of the day, it's got a lot of activity from people calling options and puts on it because it is very volatile. It's going up and down all the time, so if you can predict where it's going to go, that is an opportunity to make a lot of money as well. And so the sixth space, this will be the last space that we talk about, is geothermal. There's a lot of different companies that are doing geothermal. It's basically converting heat from the earth into energy that is produced through a lot of different practices, but Ormat Technologies, or ORA, is their stock ticker. They are a nearly $4 billion company. They've got a beta below 1, and a PE ratio is about double what you'd expect. So a lot of people believe in the business more than you would expect for how much money they're making, and they pay a bit more than 0.5% in a dividend annually. But geothermal is an interesting space because there is a lot of energy that is emitted from the center of the earth, and a lot of companies are taking advantage of that. And so the stock market is going to value green tech more and more. At least that's my belief, because we're simply going to have to. There will come a time when our oil is running out, when our rare earth materials that we have in our cell phone and our computer is running out. We're going to really have to consider sustainable business. What businesses could exist for 1,000 years? Those are the types of questions that I think we'll ask more and more in the investing world as time goes on. So Tesla is a great example of the green revolution. So a lot of the fossil fuel companies, they have lobbyists in the government that make it so that they have a lot of advantages when it comes to being invested in. Tesla's the same way. They get a lot of money from the government. But when you have people who are investing in Tesla, even though it has a -5 earnings per share, you have so many people investing in Tesla. It's a $140 billion company. It's surpassed Ford in terms of how much it's valued at, when Ford has been around for so long. They've sold so many cars. Tesla hasn't sold that many cars. But people believe in investing in businesses that they think can positively impact the planet, and that, I think, is a very noble and admirable way to invest your money. It's the purpose of why I made this video, and if you guys have any stocks that you wish that I would have included, or any areas of business that are environmentally friendly, leave them in the comments below. Next week is going to be a super interesting topic, and I'm very grateful for this one. I hope you guys have an awesome day. This has been a great episode, and we will see you guys very soon. Peace.